Greetings and welcome to the latest episode of Legal Bites, the official podcast of Cummings and Cummings Law, where we focus on helping businesses and their owners re-domesticate out of volatile legal and tax environments like Iowa to predictable pro-entrepreneurship, pro-growth states like Florida and Texas. Today, we are discussing how to move your existing LLC or corporation out of Iowa to a new state to avail yourself of tax benefits, among other advantages. But first, a brief introduction. My name is Chad Cummings, and I am an attorney and certified public accountant serving clients in matters of business, tax, and commercial law throughout the states of Florida and Texas. I am Chief Executive Officer of the multi-state, multi-attorney law firm Cummings and Cummings Law. And in addition to my day job, I also teach business and tax law at the university level. I hold 4 degrees, including 2 law degrees, together with a bachelor's degree in accounting and a master's degree in taxation, in addition to 11 professional licenses and certifications covering accounting, tax, audit, and of course, the law. My firm website is www.cummings.law. Iowa has the most dramatic tax reform story in the country. It ranked as number 43 on the Tax Foundation's State Tax Competitiveness Index in 2020. That is Hall of Shame territory. Now it has ascended to position number 17 in the most recent index. That is a 26-place improvement in 6 years. The state converted a 9-bracket individual income tax with a top rate of almost 9% into a flat tax at 3.8%, with a scheduled reduction to 3.5%. It repealed its alternative minimum tax. It eliminated the unusual policy of allowing taxpayers to deduct federal taxes from their state taxable income, a provision that complicated compliance and distorted effective rates. It phased out the inheritance tax at the state level as of 2025. It reduced the top corporate income tax rate from 12% to a more manageable 7.1% and consolidated the brackets from 4 to 2, with plans to move to a single 5.5% flat rate as revenue allows. No state has moved further or faster on tax reform in the last 6 years. The cost of that movement is visible in the revenue data. The Pew Charitable Trusts reported that Iowa's tax revenue was 13.4% below its 15-year trend as of the second quarter of 2025. That is not a good thing. That is the largest shortfall of any state in the country. Iowa cut taxes faster than revenue could acclimate, and the result is an unenviable fiscal position that depends on continued economic growth to sustain the rate cuts. If that growth slows, or if federal policy changes reduce economic activity, like tariffs, or if the state faces an unexpected downturn, the revenue gap will create pressure to reverse course and raise taxes. Iowa's rate reductions are legislative, not constitutional. What the legislature cut, the legislature can restore. The structural issues that remain are not rate issues, they are design issues. Iowa allows local governments to impose income taxes, adding a variable cost on top of the state base rate that differs by county. Iowa's property tax burden is above average, and unlike many of its regional competitors, Iowa taxes tangible personal property, including business, equipment, and inventory. A business that invests in equipment or holds inventory in Iowa pays a tax on those assets that the same business in Florida or Texas may not have to pay. The corporate income tax is still graduated with 2 brackets and has not yet consolidated into the planned 5.5% flat rate, and that indeed may never happen. That consolidation depends on revenue availability, and revenue is down, as we have discussed. State and local tax collections per capita in Iowa are $6,375, and state and local debt per capita is $7,129. The pension system is relatively well funded at 92%, which is strong by national standards and suggests Iowa is not facing the unfunded liability crisis, at least not to the same extent that plagues Illinois, Connecticut, and Hawaii. The fiscal discipline is real, but the question is whether they can sustain that trajectory. On $500,000 of pass-through income, 3.8%, which you pay in Iowa, produces $19,000 in state income tax. Add a local income tax, and the figure can rise even more. In Florida, that number is zero. In Texas, same result. That figure is zero. Over 10 years, the difference between $19,000 per year and zero is $190,000 before accounting for the time value of money or property tax differentials and the tangible personal property tax, which makes the figure even higher. Now, Iowa has come a long way from almost 9%, but it's got a long way to go. With all of that in mind, redomestication is the lesser known legal process of transferring a company's state of domicile to a new state without dissolving it, without creating a new entity, and without triggering a federal income tax, but only when performed in strict compliance with the federal Internal Revenue Code, applicable Treasury regulations, as well as the statutory frameworks of both Iowa and the destination state. When executed correctly, the company retains its existing federal employer identification number, contracts, credit history, and bank accounts. Contrast all of that with foreign entity registration. Foreign entity registration, also referred to as foreign qualification, does not change the company's domicile. In fact, it keeps the entity in Iowa and adds a second state of compliance. A traditional merger, on the other hand, creates a new entity that can trigger serious federal tax consequences. Finally, dissolution should not be part of the conversation at all because dissolution terminates the company. It is not a relocation mechanism. It is a going out of business mechanism. Redomestication, when paired with a change of personal residency and a reduction or outright cessation of business operations in Iowa, can reduce or even eliminate state tax exposure for the entity and its owners. Iowa moved from 43rd place to 17th. That is a great story in terms of reform and progress, but it is still 17 places behind the states that charge zero. And the revenue shortfall that paid for those reforms is seriously jeopardized by the current funding shortfall projections. Now, I have personally assisted a number of companies redomesticate out of Iowa with a 100% success rate to date. If someone is telling you it is impossible to redomesticate an entity out of Iowa, I encourage you to seek a second opinion from knowledgeable legal counsel. If you have questions regarding redomesticating your existing LLC or corporation out of Iowa, please use the link in the description for more information on this legal process and to schedule time for you and I to speak one-on-one about your specific scenario. Again, my name is Chad Cummings, and I hope that you found this information helpful. As always, the information in this presentation is general in nature and is not legal advice, because legal advice, by definition, must be specific to a particular set of facts and circumstances. Should you have any questions regarding this information or the content of any of my earlier presentations, please visit my website at www.cummings.law, not .com, but .law, to schedule time for a consultation. I look forward to the opportunity to speak with and perhaps even work with you very soon.